How to use the massive crypto crash to get rich. What would happen if the market in which you had investments fell overnight? Will you be able to sleep knowing that trillions of dollars have been lost? The beauty of the cryptocurrency market is that you will simultaneously feel tricked and defeated. It is erratic, and you may become a king or a pauper at any time. Crypto crash is simply a phenomenon where prices of assets drop to the lowest, sometimes without known recovery. Social events and maybe purposeful behavior might have an impact on cryptocurrency crashes. Other coins may also experience a fall when major cryptocurrencies do. Top coins like Bitcoin, Ethereum, Binance, and others have the power to upset the equilibrium of other cryptocurrencies. The value of cryptocurrencies is ethereal and erratic. It can exhibit a stunning surge and then see an overnight market crash. A crash is unpredictable and inevitable, but it may be handled by employing a plan of action. In this video, we have provided an in-depth explanation on cryptocurrency and how to handle the situation. Note that this is not financial advice, but rather a guide for everyone trying to maximize any cryptocurrency cash. Crypto crashes. On April 10th, 2013, U.S. FinCEN, Financial Crimes Enforcement Network, announced that cryptocurrency exchanges needed to register as money transmitters, which led to the biggest crypto meltdown to date. Within 24 hours, the price of Bitcoin dropped from $259.34 to $70, a 73.1% decline. For typical investors, crypto crashes, dips, losses, enormous profits, and corrections are nothing new. For novice investors, this may be rather perplexing or frightening. Even in a crypto meltdown, you may still make money if you have a thoughtful and thorough grasp of the market and use prudent methods, judgments, and actions. Before comprehending such tactics, it's crucial to understand the causes of crypto collapses. Causes of crypto crash. Cryptocurrency prices in the cryptocurrency market are influenced by macroeconomic factors as well as a few other variables, such as interest rates, inflation, etc. Here are some top causes of cryptocurrency recent crashes. 1. Famous crypto data provider CryptoQuant released their BTC leverage ratio at the beginning of the year, when it was at record highs, indicating the entry of new investors. Investors frequently start off by purchasing futures using loans in traditional markets. The rules governing cryptocurrencies also differ from country to country. Financial institutions are located in about 30 nations, including China, Iraq, Bangladesh, Algeria, and Egypt, which are far, far from crypto mining in the cryptocurrency market. The fact that the crypto collapse doesn't do well when the stock market declines is another factor that adds to it. Digital currencies cannot protect their identity as a result. 2. The blockchain network security flaws are another element contributing to cryptocurrency collapses. Suppose Bitcoin is found to have a security issue. Only a small number of Bitcoins will exist as a result of these developments for Bitcoin miners and their pricing. Unlike equities, cryptocurrencies are driven by investor emotion rather than any actual supporting assets. In addition to this, cryptocurrency influencers can increase market volatility by sending out a single tweet that triggers a quick infusion of funds. Crypto collapses are occasionally caused by the rising use of meme currencies and the uncertain usefulness of cryptocurrency. But the cryptocurrency meltdown also gives investors the chance to develop and earn using the appropriate approaches. 3. The Russian invasion of Ukraine increased tensions, which led to a 10% decline in the worldwide cryptocurrency market. Within a day, the prices of Bitcoin decreased by 8.5%, Ethereum by 12.7%, and the same goes for other cryptocurrencies. 4. The next crypto winter was expected to arrive in the new year, and this incident just heightened people's anxieties about it. The major cryptocurrencies, i.e. Bitcoin and Ethereum, reached their monthly lows with the start of Russia's special military operation. The game of battle has lately changed, though, and both sides are now using crypto. Transporting and holding actual currency becomes quite dangerous when banks stop operating. Countries are converting to crypto assets as a result. According to a study recently released by CoinShares, trade volume climbed by 231% in Russia and by 107% in Ukraine. Cryptocurrency remains a battleground, even if the major internet giants have pulled out of Russia, signaling their neutrality in the face of rising hostility. A market crash is an occurrence that has the potential to alter how cryptocurrencies perform over time. The cryptocurrency market meltdown signals what appears to be a decline in price levels. A market collapse is an unpredictably occurring event. Although experts contend that social and internet search patterns are a factor, there is actually just a little association. How to maximize profits. Once a crash comes, word of losses floods the media. Yet some cunning people manage to organize their portion of profit by using cunning tactics even during a catastrophe. Here are the top 7 methods for making enormous earnings even amid a crash. 1. Profit amid the Bitcoin crisis with opportunities in the dark. The most volatile market is the one for cryptocurrencies. The market may completely fall or grow, but they all follow the trend. Take it. If you are skilled in doing a technical analysis of the market trend, you may make money even during a crash from little swings. Even certain summits are traversed by a fatal crash. It never descends directly. Use the short-term strategy of buying them at a low and selling them at a high. Never spend a lot of money trying to extract a lot here either. Apply several movements and move intelligently so that you can manage even if you lose. 2. Coin sorting is a means of avoiding crypto meltdown. It may be as simple as borrowing the assets, selling them, and then purchasing them again at a discount to give them back to the person you borrowed from. The price's growth or decline may simply determine whether a business makes a profit or a loss. Sorting coins may be a highly dangerous move. If everything goes as planned, it will surely contain a sizable chunk at the end. But if you lose, all you have might be lost. Since it demands a lot of skill, only experienced traders employ it. On a variety of exchange platforms, you may use the tool to carry it out. 3. Manage the cryptocurrency meltdown by using fiat currency. Exiting fiat currencies is one way to prevent crypto market collapses, and many market analysts view this as a prudent move. This tactic is employed by Crypto Asset Management, and Tim Enneking, the company's managing director, attests to this. Experts clearly demonstrate that a sound strategy and understanding of market conditions are essential for this ruse. Both the time of admission and the moment of leaving should be taken into consideration. A cautionary indicator is that you should only risk the amount of money you can afford to lose, because big profits come with big dangers. 4. Use dip purchase in case of crypto crash. In a crash, making a buy move is not easy. However, it may be efficient enough to maximize the profit. A good investor with a thorough understanding of market movements and timing is required for effective dip purchasing. The cryptocurrency market is always a high-stakes game. If the overall trend is reversed at any cost, all of your purchases made at a discount will result in losses. You will only benefit from it during a broad bull market. 5. Make a variety of investments. Cryptocurrency is erratic, and no one can predict where it will ultimately go. The scenario could change due to any kind of circumstance, incident, or online impact. Diversifying their investments is a habit of wise investors. Some of the coins are crash resistant. If your investments are diversified, you may be able to recover from losses when one item declines, or even during a market catastrophe. Switching coins and diversifying investments offer stability and confidence. A diverse mind is constantly looking for a more stable and prospective coin. 6. During a crypto crash, hold on tight. How long a crash will persist is unknown. The finest thing a person can do in a crisis is to remain passive. You may similarly keep your currencies throughout the crisis. There is no use in suffering a loss if you are not offering to sell your coins for less than you paid for them. Avoiding action can be a successful crash recovery tactic. According to experts, a wallet has a better chance of surviving a crash if it contains stable and well-regarded currencies. 7. Repetition is key. A choppy market will exhibit the opposite trend. A crash will also bounce back eventually. Some industry experts support investing, waiting for a recovery, then repeating. The simplest method of making money is through this. The key to trading is patience. Although you had the guts to purchase more, you also needed to wait for the investment to increase. You can invest or trade your money for fresh, potentially profitable coins after selling any assets that can endure a fall. No matter how certain you are, you cannot forecast where the graphs will go in the upcoming minute. However, there is a chance to cut the loss down with tactful actions. In addition, we cannot ignore the reality that a high reward entails a significant risk. The name of this market undergoes regular alteration. The best case scenario and even the worst case scenario are always planned for by seasoned traders. Knowledge of the market and a lot of patience are two things that might be helpful to any cryptocurrency traders. The aforementioned tactic could assist you in making a profit or at least in minimizing your loss. However, specialists who have a thorough understanding of the procedures involved carry out these techniques. Avoid putting all your assets at danger. Instead, just put what you can afford to lose at risk.